Good day. Ira Epstein of Linn & Associates with your metals market wrap-up, and this is for Wednesday, the 22nd of April, 2020, just after 5 p.m. Central Time. I wanted to wait today intentionally to get to how the markets were going to reopen. We had a very strong close in stocks. They're giving up a bit of that. Metal markets giving up a bit of a strong day. Silver up 50 cents, the gold up like $40. We were up also in all the energies. Now, I don't trust these energies, and the reason is I don't see anything that's changing between now and when the contract expiration of the June contract comes due for more storage space. And those contracts in June, you really have to be out of them in May. So it's 4 weeks away. What are you going to do with that? And I think the Brent's a little different on when it ends, but we don't worry about Brent. We worry about the Cushing oil, which is our WTI grade. The exchanges, everybody's making some changes, and there'll be more coming. USO today changed how it's going to balance the portfolio. It's now not the front month of oil. It's going to be 40% front month, 55% second futures month, 5% the third. So you want to pay attention to those things. But let's go to the metal charts. Gold, right back up. You know, if you're a close-only trader, this market hasn't had much of a break in it at all. I think it was one of the banks, maybe Bank America today, that came out and they're talking a $3,000 price by the end of the year. Well, it could happen. I mean, at some point around the world, all this money that's being thrown to keep economies alive, and that makes sense. I mean, I realize what you got to do in a COVID-19, but there's a price to pay down the road, and people don't want to hear that. It's not the way it works. There's going to be a price to pay for all this. I heard that Mitch McConnell today talking that he doesn't want to bail out states and cities. They have the bankruptcy route open. They used it during the financial crisis. They can use it again. So I think you're hearing the Senate saying, no, they're not going to bail the states out. I live in one of the states that the pension plans just kill the state. And that's not that people shouldn't have pensions, but I don't think they should have 3 of them for working for the city. A little different. In any case, I still look at how this market has gone up. I'm watching it there. I'm watching the correction we had and how the market has come back. And no, this is a bounce. It is not a change of anything just yet. I realize the overall picture on the close chart looks good, but this doesn't. This isn't the same type of look. First, you got to get up over this high to negate the downtrend. Second, where did we fall to? We fell to the 18-day average, and that's what I expected to be the first support. It's the line in the sand. You'll hear me say this on the charts over and over and over. I teach it in my charting course. If you're a subscriber of mine, you get a code if you're a subscriber to my paid subscriptions, and you can get the charting course for $99.95, and you learn a lot of this. But to make the long story short, lower highs, lower lows into that. That's the first test as to where the support showed up. What about resistance now? Well, resistance is rather far away. The Bollinger Band's near the 1800 level, as you can see. The lower band's near 1560. We're sort of in the middle of nowhere on the chart. When I look at momentum, we have worked off a condition where we had what you call lost embedded slow stochastic trade. Right here, watch the numbers. Before them, you had 3 days in a row where the numbers were easily over the 80 level. But when you lose that, just like here, and you don't get it back right the day after, watch out. What the market is doing is setting you up. It's trying to, on rallies here, tell you, oh, you know, you're wrong. It's not going to hit it. Well, it does hit it. It comes back at that type of number over and over. I fight it sometimes myself, and I hate myself when I do it. You know, I'm looking to see, can I get that one little bounce? I know I'm wrong to trade, and you want to die with it sometimes. But I see a market now that has worked off that. It is flattening out. Both numbers are under 70, so you're no longer overbought. It's not uncommon when you have an embedded reading that's bullish. The first thing when you come out, you're overbought. When both numbers get under 70, you're no longer overbought. But any reading over 70, you are. So you always watch on this bounce what that means. So I'd be very, very cautious on it. The silver has lost its way to the gold. As soon as the market got over the 18-day average, well, you can see the bias is up in it and it hasn't given up anything. But I think it's a zone that we're fighting more than a trend. We'll find out if I'm right or wrong shortly. Silver, like gold, got itself down to that 18-day average in the past 3 sessions. Remember, we're open tonight, so these are the past 2 right here. And it is diving deeper down than the gold, so it's getting further away from that overbought scenario. Now the question is, does it get a chart pattern that you can go long or short on? So far it has not. So far it's just basically churning sideways at this point in time. The copper market. Copper was stopped on its rally attempt through the upper Bollinger Bands, collapsed after that. I guess, I can't do it, get me out. And the market falls back here, and it's sort of sitting right now trying to figure out what's its next move. And we'll see. You know, logic tells me if factories are opening and people are going back to work in America and Europe, there's going to be copper demand. Yet the market's not doing that quite yet. So you don't want your logic to take over the chart. That is so often what people do, and it doesn't work. You don't want to be ahead of the chart. You want to be with the chart. I've tried that in the past, and it rarely works for me when I try to get ahead of the chart action. In the platinum market, the swing line is down, price is over the 18-day average, so the two fight each other. You have nothing, and momentum is in a corrective mode. It has gotten out of the overbought condition, and now we're just waiting to see what the next setup is. So I think that we're interested in the metals here because they're going to set up some trades. They haven't just done it yet. In the palladium, as I mentioned the other day, my instincts are this trade's ugly. And I think you're going to get what I talked about. You're going to get that 18-day average crossing back underneath the 100-day average. Another little bit of bearishness there. You had 2 days in a row under the Bollinger Band from a tight range. That could be a breakout sign. So there's nothing here that I'm favorable on. What would get me back to neutral? Taking out the rally high that you made right there, and that number would be this day's high of 21.59. Now, I like to look at platinum. Can you trade it? Probably not. It's nearly a $50,000 margin for one contract. In the dollar index, you're still in this uptrend pattern. Market's objective, if it can continue up, is 101.02. If the market takes out 99.66, this is a failed attempt. So far, momentum up, bias up, trend up. So nothing looks like it's in the problem area just yet. You are at a 69.69 reading. So I have my doubts that it's a spot to get long. Any reading over 70 is overbought. You put it together, you got to try to come up with game plans in it. And as I said, be careful about the energies. The stock market, no surprise, a little bit of a pullback, same in the metals. It was a strong day today. We'll see how these markets want to get themselves evened up over the next 48 hours for the weekend again. And remember, a lot of states, they're talking of opening, so we'll see what goes on there. One of the things that I do, and I hope you understand it, I now publish an ETF spider video. And what that video does is it covers 27 different ETFs and spiders. Certainly all the metals. So I am covering GDX, GLD, SLV, then all of the energies are in there. I throw an interest rate one, the TLT for you, certainly the DIA, the SPY. So any of the major ones you're looking at are probably there. And the idea there is I'm publishing them at about 4:30 in the afternoon. That's because stock indexes and all the stocks close at 3, so I've got time there to get them into your hand before the next morning's trade for you. And then if you combine that with my futures video, well, you know the futures are going to set up whatever is going to happen early in the morning in the spiders and ETFs that are directly related or relying on futures markets for their pricing. So that combination fits very well together, I think. Doesn't mean I'm right, but that's what I think. How you find out about it? Go to our website. First 30 days, $8.95. We're getting a lot of people signing up for this. What the heck? It's entertainment at the very least, right? In the morning, you don't see my beautiful face there. You're going to hear me talk. I'll have my regular quote screen up, and I'm going to walk you through charts that are a bit different looking. They're black background, more studies, and I think you'll find it interesting. All it is, you're not on a contract. You can quit whenever you want. Go to www.iraepstein.com. That's where you can sign up for them. I'm Ira. You have a great day, and I'll see you all tomorrow.